Hello traders, my weekend video, it will probably be a little bit longer than normal, but I apologize for that. Global markets are in turmoil. The 1 hour momentum charts across the board for major sectors have all broken. And as of close Friday, like my Monsters Attack, my Fang, my Microsoft, my Boeing, Intel, all of those they were not even able to recapture the 15-minute charts to the upside, despite the end-of-day rally. So far the downtrend is still in place despite the rally Friday. So just keep that in mind. We did get a nice little bounce into the close, so just keep it on your watch. I'm going to look at the global indices, look at some bonds, U.S. indices, buybacks, economic calendar, earnings this week coming, and some critical charts to have on your watch here, okay? So, to get into the... Okay, I'll start with the Nikkei 225. It closed on near the lows of the session because things were just absolutely horrible there into Japanese close. And basically, I got this trend line right here. I had it drawn off of this other swing low, and that had broken. So now I'm pretty sure the next support area is down here on the Nikkei. So I think there's significant risk going into the Sunday session for the Nikkei to the downside. Okay, what I'm seeing in Hong Kong market, we've had a responsive support area on the way up for this trend to the upside, and we've had this massive sell-off. So that would be that would be our primary support area for Hong Kong. So just keep that in mind. We are getting a MACD cross. I think they were anticipating some sort of stimulus announced Monday out of Hong Kong or out of China to support the Chinese markets. So basically, you know, as you come down in the time frames, this one here is a much more powerful, secure area for China if they do not announce that stimulus. So we'll see what happens Monday session. But I do think that they found some buyers coming into Hong Kong, and a lot of people were even buying the FXI into, and that's the Chinese ETF, into the close Friday. I heard a lot of chat rooms were loading up on the FXI to the long side. So keep that in mind. As you see, the Shanghai Composite just got really hit there Friday, and it closed near the lows of the session. So, but I do think there is a chance. So basically, as you can see this right here, the consolidation bottom is lower here. So if they do not come out with some sort of stimulus announcement Friday or Monday, then this is probably going to continue to the downside. Okay, next one I'm going to talk about, that's the German DAX. That's my last main one, international, that I'm really going to talk about. And basically, we got this trend line here, and it's got a MACD cross potentially to the downside. It is an overbought situation. I think the DAX is either going to go sideways or have a responsive sell down Monday morning, and at the very least test this trend line, in my opinion. Ideally, what I normally see happening whenever we break out one of these critical fib fan zones, that the indice will literally come all the way back down to the back test and then possibly find support. So that is something that I am keeping on my watch. Another thing to really keep on your watch, that's the US dollar JPY. This is the bullish currency pair. As long as this remains in an uptrend, it's bullish the overall markets. We are getting a touching cross and a histogram turned to zero on this trend. So this is suggesting that we're running out of steam for the bullish trend to the upside for this pair, and that would add additional pressure to the markets. As you can see with the Dixie, we are getting actually a bullish signal on our MACD down here, and quite bullish on the dollar here. We are right here at range highs. A lot of fear in the global markets. They are using the U.S. dollar like the U.S. bonds as a. They are parking their money in U.S. Bonds and U.S. dollar, and well, gold to some extent too, and it's driving down U.S. bond yields. And with all the debt we've got going on, that's a very good thing too. But we did have a responsive breakout of a fib fan, and we back tested it there Friday. We will see what happens, but the MACD is suggesting a bid, continued bid this week in the dollar right now. Now, on the flip side, the euro, though it's really keeping the dollar inflated here, we do have a Brexit vote. They're going to vote on whether or not they want to have a hard Brexit. And they could have done this vote differently, but by doing it the way they're doing it, they wanted the vote to fail. That's why they designed it that way by the idea of having a politician step up and vote. I want a hard Brexit. It's a lot harder for a politician to do that than just to say that I want to support the Brexit. On the flip side, I want to continue supporting the Brexit. So they did this, and I think the market's anticipating the vote to fail. But this is something of major consequence, because what happens here, if they have a hard Brexit, this is really going to hurt the euro, because basically their only power holding all those countries together is the fear that there's going to be a major penalty if they decide to leave. And if England decides to vote on a hard Brexit, it's going to be devastating to the global markets. So just keep that in mind. I do think going into that, we're going to be breaking this Monday morning and coming back, starting to trend to the downside. And you notice once we start breaking down below here, I mean, we can get some major moves. The last time it broke down through here, we had a major move once it started going lower. So I'm not for sure if it'll happen before the vote or not, but it's something to keep on watch. Then on the U.S. equity side, I'm going a little bit more detail here. And basically, what we got going on here on volume profile, a very supportive volume profile is a very solid bell curve to launch higher off of, which we had back here. And on this bell curve situation, this is an elongated bell curve situation. And that's why it wasn't supportive at prices up here. And that's why they were rejected, in my opinion. There was other reasons too, but you don't really want to have an elongated bell curve for support. So the best thing that can happen for us right here is to hang out in this area and build this value out, and then we can repeat what happened down here. And basically, we came down to monthly value area low and found responsive buyers into the close Friday, and it was a very positive thing. So just keep this one on your watch. Okay, on our NASDAQ here, as you can see, I've had this downtrending line. We managed not only to bounce off of monthly support, we bounced above that downward trend line. So this was quite a bullish scenario into the close for the technology stocks. And I also want to point out the bell curve supporting the technology is much more secure than what we're seeing in the other indices. So I just want to point that out. We have a much more secure volume profile for technology, suggesting that we might have actually seen the lows in this market. So just keep that in mind. That we have some support in the technology area. And the Russell, it was the worst. I mean, basically, we came off a really nice bell curve, nice supportive, and we just rocketed up on the Russell. It was a major short squeeze. There's just really no volume build out whatsoever. And that's why even when we got that rally, you notice it didn't come back over this trend line. I mean, it had a rally, but not much at all into the close. So this is the problem child going forward here, in my opinion. But we are holding the monthly value area low. The diamonds, similar situation. We rocketed up largely because of Boeing and Intel. And you know, we came down past this, rocket up above this trend line. Like I said before, the most logical under this situation is a back test of that trend line. So just keep that in mind. That I'm really looking for the Dow to show some relative weakness if the markets continue to show some selling pressure here. So, but we did manage to hold the monthly value area low. So keep that in mind. And best case scenario, we hold up here, we build out value, supporting this big move up in the markets. Now I want to talk about some bonds real quick here. I've got the yields up, the yield chart up, not the bond chart up. So lower means that there's a bid in the bonds. It's a risk off scenario, okay? And basically, we've had this rocketed down on the German bonds, and they found responsive buying. Well, now we have an engulfing candle at this same area. And the last time we had an an engulfing fail candle, we rejected and broke down. So just keep this in mind. I do think the German bonds are going to see continued weakness the first of the week. The Italy bonds, we have a little mini head and shoulders situation with the trend line below. This is one of the more riskier areas in the market, so I'm most certain that we're going to be breaking this down, testing at quite possibly into the Brexit vote, and that's Tuesday. Greece, we are marking right here the lowest yields on the Greece bonds, right here, right now, and so any lower, and then we're going to be putting in new lows on the Greece bonds. Spain, similar situation as Germany. Came right down here to that responsive. We have found a responsive buyer last time at the bottom of the trend. We had this could just be a capitulation sell-off. I don't know what's going to happen Monday, but this is something to really keep on your watch here. The last time we came down here, we did resolve lower a little bit before it finally caught a bid. Japan, like I said, showing some relative weakness right here. I mean, I really don't see this as a supporting area. I mean, we've had several weeks here, several weeks here of support, but just keep this on your watch too. Japan's not quite as risky in my opinion, but if Japan starts falling out of bed, you know what's going to happen to the bonds. Now, on the flip side, what I want to talk about here, and that is we actually caught a bid into the China bonds there last week. And so just keep this on your watch here. I mean, we did have a little bit of an uptick in our China bonds, and that was largely due to the Monday they announced stimulus last Monday in China. They cut taxes and then they raised lending. And so we did, despite the sell-off in the Chinese equities, the bonds did manage to hold a slight bid into the close of the week. And that could also mean that the markets are trying to anticipate even further stimulus, which could be, if they do it in the right way, that could put a bid into the yields and a little bit risk off in the bonds. Okay, I want to talk about the buybacks a little bit, and we are planning on putting in record buybacks this year in the U.S. markets, and we put in very strong December. December buybacks were really strong, and I just want to point that out. And a lot of those buybacks into the end of the year were in the technology space, so keep that in mind. And very strong scenario. But my point is, I don't know if you can see. I don't even know if I got a chart here. We're actually U.S. companies are buying more shares back right now than what they're actually capex is, and capex is their operation spending. So they're spending more right now to buy back their shares than what they're actually spending to run the company. So just keep that in mind. That's not sustainable if over the forever. So just keep that on your watch. And as you can see, they wanted to end the year on a very high note, almost 820 billion in buybacks to close the year out in December. And I wanted to talk about how the earnings guidance is not supporting all these buybacks. I mean, if the companies are pretty much 50% or more of U.S. based sales, I mean, their guidance is up 1% on earnings, and they're 6.5% on revenue growth for domestic operations. And if you go with all S&P companies, okay, and try it, the earnings are going to be down 3.4% this year. That's the anticipations right now, where we're actually have negative earnings growth this year. And the anticipations, the revenues are going to be up about 5%. But if they have 50% or more exposure overseas, they are really expecting revenues to get decimated this year. So just keep this in mind. Foreign exposure companies are the ones that are at greatest risk going forward here, and that includes Boeing. Okay, we've seen what happened to Boeing here, so just wanted to point that out. And as you can see, we ended the year with technology being strong on buybacks. Okay, and I wanted to point out here, so far this year, for the first quarter here, the major negative earnings guidance going forward, information technology. Okay, and so that tells me, and I've noticed this for a long time now on these buybacks, that by the time they announce the buybacks, the main gut of their money has already been booked it's in the bank. So these buybacks are to support prices as their guidance, the peak of the market, at least short term or long term, is over with. And so these markets are being supported by all these massive buybacks. They're buying these backs at these lofty prices. And I noticed with CSX last week, they had higher guidance going into earnings just a few weeks ago. Okay, and then they announced this great big buyback. Okay, and then after they do that, last week they lower guidance after they've already pre-announced this big buyback. And that's a scenario I am seeing quite frequently with many companies. And what they're doing, they're getting that announcement out there, okay, and not buying their shares back yet to drive prices lower so they can support their stock. Okay, Apple did the same thing. Okay, and that's why I think Apple is setting up for a long here, because I do think the company is accumulating share, or they're buying back shares right here at this price point, and once they get done, they're going to allow the price to float higher. And here's a quick list from MarketBeat. CSX had a 9.1% buyback announcement, $5 billion, which is pretty good. Okay, and so keep an eye on all your buybacks, and there's some other big ones down here at the bottom. My point is, like your Johnson Controls, your Lamb Research, huge buybacks. Best Buy, Foot Locker, Lear, Skyworks. These are companies that are actually having some pretty sizable buybacks. Okay, so just keep that in mind, that they listen if they start issuing earnings or lowering their earnings guidance and stuff, because that's probably what they're trying to do, is not necessarily drive prices down, but they want to buy their own shares back at cheaper prices. So with that scenario being said, and I'm thinking a lot of these companies are wanting to drive prices lower to buy their shares back. This is a scenario, the put to call ratio. And this is one thing I noticed Friday, early on in the Friday trading, that they were not accumulating puts into the close Friday. So the markets were going down, but they were not buying additional insurance on the way down in the markets. And so and plus what was going on with the Chinese bonds, they found a short squeeze into the close Friday back up to support, and I think that's what was happening. But one thing I'm really looking for before I can say the bottom is in, I'd like to see a capitulation on the put to call ratios, where they give up on the calls and they really drive up the puts, and we have not seen that yet. And so that's a scenario that I would like to see this week is a major spike in put action, and then maybe adding additional long exposure. I think that's what the market makers are actually looking for as well. I found this one guy on the internet. He seems to think the VIX is just going to go to the moon here, April and May, which could very well happen if we impose those tariffs on China, which Trump has been backed in the corner now. Basically, what's going on here? Trump's an elected official. Where over in China, they appoint their president, so he doesn't care if he's popular or not, and he can just throw his hands up and walk away from any type of deals and just wait for the next president to come into office. And that's exactly what I think is going on. And I don't think that they want to make a deal. I think they just want to wait for a more accommodative regime to come back into office. And it's in his best interest not to have a deal so Trump doesn't gain any traction into the next election season, in my opinion. So if that's the case, Trump's going to be in a situation where he either has to impose those additional tariffs, putting the whole world into a recession, and then he has to own it, or he's going to have to give up on the additional tariffs. So it's going to be really interesting to see what happens this week on that. And plus, we have the whole Brexit thing too, the vote happening Tuesday. So just keep this in mind. This chart, it could happen. Here's another view of what's going on here. We broke this primary uptrend. We're just back testing it, drifting off away from it a little bit right now. Okay, which technically you always short this area in the markets, so just keep that in mind. And we are keeping a bit in volatility. And then from an Elliott wave point of view, this is the free fall territory. This is wave C of 5. I mean, this is typically where you see a major correction. But with all the government central bank manipulation and all the buybacks, can't say for sure this is what's going to happen here in the U.S. Here's another scenario chart I thought was quite interesting, and I have to tend to agree. This is a scenario I am more apt to think is going to happen. We are going to get an inverted head and shoulders here, and then we'll see what happens. So we'll see what happens. Just an idea I'm floating out there. Then another critical area you got to keep an eye on, and that's your high yield bonds. Okay, and this is a very, I really like this chart. How the person I found this from had this drawn out, and we're at resistance here, and how our stochastics and our RSIs are rolling over here, overbought situations. Yeah, seeing the idea that the high yield bonds are rolling over, that is a very bearish scenario, supporting the bears to the downside. Another leading indicator, our building permits. Totally imploding here. Look at this, all the way back to 2013 on the charts. Never had a reading like this. So just keep that in mind. Housing tends to lead away in a corrective phase in the market. We gave up all of 2018's payroll. Construction payroll is below 2018's levels already. Okay, so construction is not doing well. And another major thing, auto parts, and they get these out of China. Look at this. We have broken below 2013 levels. And these are our durable good areas. And we have economic data hitting Wednesday that's going to factor this in. So just keep this in mind. This is our leading indicator. If you're not getting the parts in from China, which take weeks and months to get across the ocean, if they're not ordering, the purchasing managers are not ordering the parts, then you're not going to be shipping the parts. And that also feeds into CSX lowering their shipping, because the cars are a primary shipping instrument in transport for railroads. So important to note that. Along with the auto, you got a breakdown in our copper and steel. Both of them needed in automotive production and manufacturing in general. So just keep that in mind. A lot of these charts looking sad here. And a secondary view from China. This is an overbought chart that I found. This deals with the Chinese 50 biggest companies. And you can see this is a topping situation with those long elongated bars. I don't have a volume profile on here, but when you see elongated bars like that, there's no volume profile value supporting price up here. The volume price supports down here. Okay? So just keep that in mind. Very good chance that we can't support the prices on the top 50 Chinese stocks. Secondary look at the FXI. Broke from the Christmas Eve lows. It's broken trend. And then, Marvell. We have Broadcom reporting Friday. So I just wanted to point this one out. This is our major semiconductors. And yes, I do think we do have volume support for the technology space. But man, Marvell really lowered their guidance and earnings, and it does not look supportive at all at this price level. And that could be a dragger for all these stocks going into this week. And I still have a squeeze on the 4-hour for the SMH. That's a semiconductor index, and it is resolving to the downside. So, there is a potential momentum for the semis to break down even further this week if the markets continue to sell. The top option activity that really alerted to me, the VIX. That's what stood out to me. We got the April 17s, 24s, and 27s. They hit as of Friday. And that's a pretty big investment here on the VIX. And they were buying protection Friday. Some sizable VIX protection in the calls Friday, which may or may not pan out for them. But this is something to keep on your watch. Then I want to talk about the yield curve real quick. And I want to point out the 1 year is right now is still back above the 7-year on the yield curve. And the markets are really going to start getting skittish if the 1 year, the shorter dated time frames start going over the 10-year. So just keep this on. That's the line in the sand where things really start getting sketchy for the markets. So I just want to keep this. It's slowly inching up from time to time, and it's just. And now, since we're talking about potentially stimulus and cutting interest rates, it's crashing the long end of the curve, but the short end of the curve, because of the fear in the markets, are keeping a bid. It's not a really great scenario for financials. A lot of buyers were making some pretty good money. They bought right at the lows on Tesla Friday, right on this trend line. And they were getting really bullish. They were even taking swings to the overnight session on Tesla because of this channel low. I'm not in that camp myself. I just don't. Tesla, so many things are, they've lost they're losing all their government subsidies. And unless something politically changes there, I'm thinking Tesla's coming down into this prior trading zone down here. It's just one major scandal away from doing it. So that's just my thoughts on it. Okay, this is my longest video so far, so I'm really going to try to go through this real quick here. I've got these all on the 1-hour chart. Now, I want to point out here, the one that's holding out the best, that's Facebook, of course. We're still holding above our trend line, okay? And then we have Google, still holding out above our trend line. Those are only two that are still showing a bullish sentiment to the upside. And the others really got whopped the past 2 days. especially Friday. Walloped Thursday and Friday, and they broke the trend. So the primary trend for our big tech stocks is to the downside, technically, even though we did get that rally into the close. I did want to point out Apple, Facebook, and Boeing are all potentially crossing over the 15-minute charts to the upside. So those three are the ones that you would want to look coming into Monday. If the markets are going to catch a bid, our monsters of tech, these are the ones to be watching. And then financials, I always try to keep a close eye on the financials here. And I went out on 4-hour charts here because a lot of the 1-hour charts have already broken on financials. They really got decimated last week. And as you can see here, not many of them are still holding above. You got Wells Fargo on the 4-hour and American Express. Those are only two major financial related stocks that are still holding above their 4-hour. So we're actually getting more relative weakness in our banking sector than we actually are seeing in our technology sector. But we did see some relative strength in Goldman Sachs Friday. It's still down here. As you can see, we rallied up hard on Goldman Sachs. And remember, it's got a major buyback program going on here. So what was going on here might have been a buyback program kicking in on Goldman Sachs here. So just something to keep on your watch here for what potentially happened. So just wanted to let you know about that. Okay, I'm going to go over the economic calendar from last week a little bit here. Like I said, we had China Monday come out and cut taxes, raise lending. And then Wednesday, we had negative news on semiconductor sales. Wednesday hit the markets and started selling off the semiconductors. And then Draghi also lowered growth Thursday, global growth forecast Thursday. So that hit the market. And then Friday, China exports hit. And then we had U.S. payrolls miss big time because of the big shutdown and everything hitting the markets. So, yeah, it was a major miss. And then Monday, we got retail sales are going to hit the month-on-month retail sales. And remember, we had this big shutdown. We've had winter storms. And there was another thing, too. I can't remember. I can't remember off the top of my head. But there's a lot of reasons, and a lot of people are thinking the retail sales are going to miss Monday. So keep that in mind. We got that responsive bid in the markets Friday. It can easily be wiped out if the retail sales come in as bad as I'm thinking for month on month. Okay. Powell speaks a Monday evening at 8 o'clock. I don't think it could be a major thing if he starts talking about cutting rates. And then Tuesday, we got our CPI, that's our Consumer Price Index, and that's going to give us an idea on inflation, which, quite frankly, I don't think there is inflation. We are probably on the verge of deflation setting up here. And then Tuesday also, in the afternoon, we're talking about the Brexit vote, whether or not they want to have a hard Brexit. So that's likely to keep downward pressure on the markets into the Brexit vote, in my opinion. And then after that, we could probably see a major short squeeze in the markets if we can get that behind us and they finally decide there's not going to be a hard Brexit. And then Wednesday, we're going to have durable good orders, and that's a major one, in my opinion. I think that's going to give you a pretty good tell on construction and the construction of automobiles and all that stuff. And the only one that's really going to shine, that's the airlines, in my opinion. And we're probably even going to see some bad numbers starting to float in out of Caterpillar based on the what's going on in China. And we had the Producer's Price Index month on month. Like I said, I do think we are entering an age of deflationary prices. And crude oil inventories. And then Thursday, we have some new home sales data week on week. And then Friday, we have the Empire State Manufacturing Survey. talking about the state of the economy, which is likely to give a bad read. That's a sentiment read, and consumer sentiment is going to be month on month. That's actually going to be a bad read Friday too. And then on our earnings calendar, the main ones, Dick's Sporting Goods. This is a pretty big, major, big block store, and those have been gapping up generally. But right here with the way the markets are, can't say for sure that's going to happen. That's one that stands out. And then I'm not really seeing anything on the earnings front of significance until we get to Thursday. And that's when Broadcom and Adobe and Ultra Salons and Oracle. And I think Oracle's just going to get destroyed. They really had lower guidance last quarter, and the markets just blew it off. I mean, that's one I tried Friday, and it didn't work out. But I'm actually going to try again Monday to the short side. I just do not like Oracle at all going into those numbers. And then I also mentioned, is it Friday? No, that's the ones. But Broadcom, that's the one you really have to watch, considering what happened to Marvell, and with all the semiconductor downgrades. It's just a contagion from China. If China doesn't need our semiconductors, that's a major downfall for the whole technology space. So despite the fact we do have value in the Qs, we could significantly see some down pressure in a lot of the tech names this week. Okay, if you liked the video, please like it and leave comments below. I'm trying to learn everything I can. I gave you the best overview I could think of. I'm sorry the video is a little bit longer, but I thought given the nature of the recent sell-off, I had to give a little more in-depth overview. Thanks a lot, and I will see you next weekend for the weekend overview.